Hey everyone, welcome back to the channel. Today, we're diving into a story that's got the entire tech world buzzing and frankly a little worried. Imagine waking up and finding out a single earthquake could potentially disrupt the entire global supply chain. Sounds crazy, right? Well, that's exactly what's happening with TSMC, the world's leading chipmaker. They've just warned that their Q1 revenue will likely be at the lower end of their guidance due to the recent earthquake in Taiwan. This isn't just a minor hiccup. This is a potential Chipageddon scenario we need to understand. So, what exactly happened? TSMC, the company that makes chips for everyone from Apple to NVIDIA, announced that the earthquake caused production disruptions. Now, their initial revenue guidance for Q1 2025 was $25 billion to $25.8 billion. Falling to the lower end of that range is a huge deal. We're talking potentially hundreds of millions of dollars in lost revenue. And that's just the beginning. The market reacted swiftly, with TSMC's stock price dropping 1.8% immediately. Investor confidence is shaken, and rightfully so. But why is this earthquake such a big deal anyway? Let's break it down. Let's start with the immediate, first-order impacts. First, you've got TSMC's revenue shortfall, plain and simple. Then, there are the production disruptions. Earthquakes can wreak havoc on delicate chip manufacturing equipment. We're talking about damage to machinery, contamination of clean rooms, the super sterile environments needed to make these chips, and downtime for safety inspections and repairs. All this adds up to increased costs for TSMC. They have to repair equipment, clean up facilities, and potentially expedite production to catch up. This isn't cheap, folks. It's a multi-million-dollar headache. Now, let's zoom out and look at the second-order impacts, the ripple effects. TSMC is the linchpin of the global semiconductor supply chain. When they stumble, everyone feels it. Reduced output from TSMC can lead to delays in the production of everything from smartphones and laptops to cars and gaming consoles. Think about it. No chips, no products. This is especially concerning for industries that rely on advanced semiconductors, the cutting-edge stuff that TSMC specializes in. If you're planning on buying a new gadget this year, this could seriously impact availability. And here's another kicker. Increased chip prices. When supply is constrained, it's basic economics. Prices go up. This impacts the profitability of companies that buy chips from TSMC, and ultimately, it could lead to higher prices for consumers. Are you ready to pay more for your next iPhone or car? Probably not. This earthquake is a ticking time bomb for inflation. This isn't just about tech, it's about your wallet. Let's talk specifics. Companies like Apple, NVIDIA, AMD, and Qualcomm are heavily reliant on TSMC for chip manufacturing. They could face serious challenges in meeting their own production targets. They might need to scramble to find alternative suppliers, but that's easier said than done. TSMC's competitors, like Samsung, could potentially benefit from this. Customers might start looking elsewhere, giving Samsung a chance to grab market share. This is a high-stakes game of musical chairs, and the music just stopped. Don't forget about the companies that supply equipment and materials to TSMC. They might see a temporary dip in orders as TSMC focuses on repairs and recovery. It's a domino effect. One company's misfortune becomes another's headache. The entire ecosystem is interconnected, and this earthquake is exposing just how fragile that system can be. Okay, let's go even deeper. What are the third-order, socio-economic impacts? Well, we've already touched on inflation. Higher chip prices can contribute to broader inflationary pressures on consumer electronics and other goods. This is bad news for everyone. It erodes purchasing power and makes life more expensive. The Federal Reserve is already battling inflation. This could throw a wrench into their plans. But it gets worse. If chip shortages become severe, they could negatively impact economic growth in sectors that rely heavily on semiconductors. This is especially true for countries with significant electronics manufacturing industries. We're talking about potential slowdowns in production, reduced exports, and even, wait for it, job losses. Yes, prolonged disruptions could lead to job losses in industries that depend on chips. This is a worst-case scenario, but it's a possibility we can't ignore. And here's the really big picture. Geopolitical implications. The earthquake highlights the vulnerability of the global chip supply chain, which is heavily concentrated in Taiwan. This could further incentivize efforts to diversify chip production to other regions, like the US and Europe. We're already seeing massive investments in new chip factories outside of Taiwan. This could lead to significant shifts in geopolitical power as countries vie for control of this critical technology. The stakes are incredibly high. One positive outcome? This earthquake will likely lead to increased scrutiny of disaster preparedness measures in Taiwan and other regions with significant semiconductor manufacturing. Expect to see investments in infrastructure and risk mitigation strategies. Companies and governments will be forced to take a hard look at their vulnerabilities and take steps to protect themselves from future disasters. It's a painful lesson, but hopefully, it will lead to greater resilience in the long run. Let's circle back to the consumer. You, me, everyone. We could face higher prices and limited availability of electronics, cars, and other goods that rely on semiconductors. Delays in product releases could also occur. That new gaming console you've been waiting for might take a little longer to arrive. This earthquake is a reminder that even seemingly distant events can have a direct impact on our daily lives. Now, let's switch gears and talk about risk. What are the specific risks associated with this situation? First, the technological risks. The earthquake directly impacts TSMC's ability to produce chips. Damage to facilities, contamination of clean rooms, and equipment malfunctions are all possibilities. And let's not forget the supply chain vulnerability. TSMC is a critical player, and any disruption can have cascading effects. Finally, there's the risk of a technological setback. Recovering from earthquake damage can delay the implementation of new technologies. From a business perspective, the risks are equally significant. We're talking about revenue reduction, increased costs, reputational damage, and potential breaches of contractual obligations. Delays in production could cause TSMC to fail to deliver on its promises to customers, leading to penalties or loss of future business. This is a high-pressure situation, and TSMC needs to navigate it carefully. Switching gears slightly, I want to touch on something related. The ethical risks of AI-assisted content creation, as highlighted in some of the background information. We need to be transparent about when and how AI is used in generating news. Readers deserve to know whether they're reading content written solely by humans or augmented by AI. Lack of transparency erodes trust. Bias in AI-generated content is also a major concern. We need to ensure that algorithms are not biased towards certain companies or sectors. Accuracy is paramount, and robust fact-checking processes are essential. Technologically, there are also risks associated with over-reliance on AI. It could lead to a decline in the quality of content if human expertise is devalued. Algorithm errors could lead to inaccuracies, damaging a news organization's reputation. And let's not forget about security vulnerabilities. AI systems can be vulnerable to attacks, leading to the dissemination of false or misleading information. It's a double-edged sword. Finally, I want to briefly address the ethical risks surrounding data privacy, as exemplified by Yahoo's cookie consent practices. Are users fully informed about what data is being collected, how it's being used, and who it's being shared with? Transparency and choice are crucial. Users need to have meaningful control over their data. We need to be wary of dark patterns that manipulate users into accepting more data collection than they're comfortable with. And the use of precise geolocation data requires explicit and informed consent. Data security is paramount. Data breaches can have devastating consequences. So, what's the takeaway? A seemingly localized earthquake can have cascading effects throughout the global economy due to the critical role of TSMC in the semiconductor industry. The risks range from immediate operational and financial impacts to longer-term ethical considerations related to AI and data privacy. This is a complex situation with no easy answers. But one thing is clear: the global supply chain is more fragile than we thought, and we need to take steps to build greater resilience. Is this the start of a Chipageddon? Only time will tell. But we need to be prepared for the worst. Thanks for watching, and don't forget to subscribe for more in-depth analysis of the tech world's biggest stories. What do you think will happen? Let me know in the comments below.